There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
With the first week of the month, there's a lot of news. So news first week, news last week of the month. Usually those 2 weeks are your heavier news weeks. But we're in March, which is also the end of the first quarter. So people's it's extra financial stuff that goes on there. But we're having, some pretty wild, markets in general. But I also want to show y'all how we're doing things with Zeus within these crazy markets. But, who's excited? Even in times, uncertain times, there's still opportunity. And that's this, what's going on is literally a testament to why knowing this skill, having this skill set is so powerful. Because if things are bad, you can make money. If things are great, you can make money. Of course, with trading, you can also lose money. But with what we teach, what we use as our software, the inner workings of that, we help people get an edge when it comes to their trading. And that edge is what makes them profitable. So let's see what we got. But I want to jump on. I want to do just a couple analysis while we're waiting for some people to get on. Like I said, if you know anybody in the AP Live, just go in there and let them know that we're in Insights. To get to Insights, just tell them, just go to the same AP Live tab, but instead of choosing the one down here, which is my weekly call, not my weekly calls, but my sessions, my trading sessions, we're going to be here. So if you got anybody that's trying to hop on, we're in the weekly Insights. Let's see here. All right, so let's get started. I think it's good enough time. Who has been trading in the last couple days? Let me know if you've been trading. How things been going. I want to also answer any questions you may have about the software, because this is the weekly Insights call, and with the Insights I like to focus on the software a lot as well. We'll go over news. We'll go over more of a long-term look into the markets. And then, what we're looking to do as far as Zeus is concerned. So let's see here. Let me get back in my room so I can see the chat. All right, there we go. Make sure it doesn't echo. But let's get right into our analysis. So first thing you want to do is let's look at gold. Gold has been kind of choppy, but at the same time, even in its choppiness, our rules are playing to effect. We were at first last week we were expecting this extension to create a lower low. That didn't happen, and now we're back in our bullish scheme of things. Reason being is because this was the last significant low here. This was the last significant low that was broken when this high was created. So that high, broke that low, or the last significant high was broken and created this higher high. And now we have, this higher low that was recently formed here. So that's letting me know that the markets are trending towards the upward side of things. Now, if we go to the longer term aspects of gold, I want to point out that we're getting to a pretty interesting level, and I pointed this out before things broke out in Europe. Was these yearly high levels, and also at the same time, there's a key level that the market is currently at on the weekly time frame. And let me actually make it a zone so people don't think it's an exact level. I used to do that when I was first trading. Somebody draw a line, I think it was exactly that price, but it's a zone. It's always a zone. But looking into the markets here, a couple things can play out. If you look at the last two, the previous weekly candle. So the previous weekly candle, let me take this off of it. There we go. You see how it created this long wick at that same zone that I just pointed out here. The same zone. What you'll see is that you have that bearish rejection of that zone. All the times that after this high was created and it was broken to the downside, it hasn't broken this level for the last 2 years. But the market is currently back at that level now. But this time around, we have more things going on, more news, more events going on around the world that can either fuel a breakout of this move, or create a longer term down move. We'll see what happens, but I'm a little bit bullish here because of the added fuel we have for gold. Historically, in more warish times around the world, gold usually has more value just in general. So going into that historical trend, maybe we could see some more bullish activity and maybe break out of that zone. So that's what I'm looking at here, and I wanted to point that out because we're at a key level when it comes to gold. Indices. Let's go to our markup here. I had mentioned, I think, was it Thursday? I think on our Thursday session, because we were here, our Thursday session, and I was like, hey, higher high, we're looking for a higher low. From an institutional perspective, we have a lot of imbalance in this area. It can go as far down as being in this order block here. It rejected off the imbalance, so it never broke past that imbalance, and from that imbalance point, it created a pretty large move, almost a 10,000 pip move. So what we're looking at, we're just playing it literally, by ear. And what I always teach is we're looking for that, after we get that higher low, we're looking for that higher high. So, We're looking for this extension move here, but looking at the markets now, you may get it like another higher low. Maybe down into, oh, not this one. Maybe down into this area here to line up with not only the Fibonacci from this point to this point, back into that 61.8, but also this zone that's been formed here. Because notice how the candles are that breaks it. Large candles that's broken that zone, followed by a bunch of wicks when price reaches that zone. So that's a pretty respected zone. See another break, big candle to break it, wicks, and then a strong move that it took a strong move to break that level again. So all of that is supporting evidence that that is a strong level. So we'll see what happens here if it continues to make that higher low from that point, or maybe it stops a little bit short. We just have to wait for the market to get to the points and reject from that. So those are our main two kind of scenarios that we have at play between gold and indices. I don't want to go over like the entire Forex aspect of things, but just give you just a long-term play at things. You see also with the indices, or just US 30, is you also have, it's kind of an ugly one, but you also have a head and shoulders in play. And really all a head and shoulders is, and doesn't have to be even either. That's another myth with head and shoulders. So a bullish head and shoulders is a low followed by a lower low followed by a higher low. That's all a head and shoulders is. It doesn't have to be perfectly even. It doesn't have to meet a certain Fibonacci requirement. It just needs to have that. A low followed by a lower low followed by a higher low. So we have that. We have that in play here on the 4-hour time frame on US 30. So another general rule of thumb. Now I don't take this as absolute law, but a general rule of thumb is that after the head and shoulders is broken out, the expansion out of that head and shoulders pattern is equivalent to from the top of the head to the neckline, which is this line here. So if I was to make a line where the neckline is, that line here is the equivalent distance between the head and the neckline. So if it broke out here, now I don't know how long it'll take to get to that point. This is not something that's going to, especially the 4-hour time frame. So it may take, you see how it took, just think about the time aspect of things. From here to the neck, from the top of the head, it took 3 days, a week or so to get to that point. From here to here, it took roughly 3-4 days. So I think there was a weekend in the middle of this. It was right after a weekend that happened. So will it take 3 days? Maybe, but I wouldn't say as soon as this breaks out it's going to go straight to that. It may take a week or two, but this is just something to have in mind for your longer term perspective. How does this apply to Zeus? So if you have a longer term bias or longer term analysis, and this is something that I teach with trading, something that I teach with Zeus, is that you can take that, this is too small of a, you can take that longer term analysis and trade into that direction, especially if you're finding out the trend of the longer term. You can go to a smaller time frame and use that to catch entries in that direction. So if I'm looking at buys on gold, buys on US 30, as my longer time frame analysis, and I can find opportunities that qualify for a buy on Zeus, then I'm literally, I have more confidence in that position because of the confirmations of Zeus itself, and then I have a big picture of the market. Like I have a clear picture of how the market is shaping out from based off what it's been doing over the last week or so. So I can use all that to get, an edge in trading and create that edge for myself to trade from. So that's how that works. See the DXY. Well, it doesn't. Well, we would have to probably try to go to some historical charts because it wouldn't be on here. I'd have to go to like stock charts to probably try to find those points. But one interesting thing is I like to point out. We go to the monthly time frame. That was the coronavirus, but I don't think this is as big of an issue yet as the coronavirus. Where is it? 2007. September 2007. Here. From that point on, this was a crash in the markets as well. So like what you'll see is that you see how it took, so I'm not going to get past 03. So let's just add a year, 2002, April 2002. Let's just say it was down there because Dow Jones generally goes up over time versus down. Let me see if I can pull up the actual Dow Jones. Maybe use that. Dow Jones, CFD, here, Dow Jones Industrial Average. There we go. So, 2007. It made its low in October 2002. So this is normal. This is normal accumulation of the Dow Jones, right? Nothing crazy happening. I mean, yeah, we have. I think it was the Iraq War at the time, but there's something going on war-wise around the world, something. But this is a financial market, so this is going to more so react to a financial crisis. So when 2007 the housing bubble burst, this took roughly 6 years, 6 years to accumulate. And that 5 to 6 year run was negated in 2 years. A year and a half. Not even 2 years. A year and a half. So when you have like unrest from a financial point, the only thing I'm saying is things can move a lot faster. The other thing was, I'm trying to remember the exact time. Like this was the whole .com burst here. Well, actually, it wasn't that one. It was this one. .com bubble bursting. So financial stuff is what's going to create those dramatic moves. Other than that, there's coronavirus here. So you see all these dramatic moves came from financial crisis. Yeah, there's wars going on, but just looking at the numbers, finances, like I could label them: housing bubble, .com bubble, and coronavirus. The three major crashes. If I go to gold, let me see if I can find the stock version of gold. Gold futures, not from there. Gold mining company, look here. Gold itself. No, not that. Okay, so I think that's about as good as I'm gonna get. Okay, so same thing. Now gold is only going to react to. Now that what I was talking about earlier was the indices. Now, as far as financial crisis, now gold will react to more, war stuff. Because look at where's the financial housing bubble 2007. So here, there. So look at the difference between gold, the gold housing bubble, there. If I use that same period, I think that if I have to go back, I should put both of them up. Hold on. Yeah, so I mean, it's an interesting take because I think, and plus it plays into what's going on now, kind of looking at historical significant moments in the market or in the world. So Dow Jones. All right. So .com. So look, this is right here. This is September 07 to March of 09. That, right? This is Dow Jones. Now going back to gold. So let's go to September of 07 to March of 09. September 07 to March of 09. So basically, it was in an uptrend. That's still like a higher low. So, but the initial, those first 6 months, which was the heat of the crash, it created an impulse up. So, for periods of financial unrest, or financial unrest, or political or geographical unrest, wars, gold tends to have bullish moves. Like if I go, it's another one, another significant event war-wise was, here we go, September 11. Let me actually, I want to go by the week. Because gold one didn't move that much back then. But September of 2001, huge up move. So like that was a geographical event. I can't remember other events off the top of my head as far as wars go, like the exact month it started. But those are my two examples there. Going into, where were we at? 2000, coronavirus. See here, financial crisis caused an up move in gold. But in indices, it caused a down move. These are your correlations based off of news. What was the other one? How did I do housing bubble? Yeah, I did. Did housing bubble, and .com bubble was kind of irrelevant. I mean, you had it. I think it was August of 01. But this whole little area here, I can't remember if it was 01 or August of 01 or 02. But that whole jump was bullish anyway. So different correlations. So that's enough on that topic. But I wanted to kind of bring that up. It was a good question in line with what I wanted to do from a long-term perspective, macroeconomics perspective during faster news moments. I'll just say like that, whether it's war, finance, political, where there's a little bit of I guess, higher tension in those areas. These are how the markets react. You usually have big moves. So what's the whole bottom line of why I just spent 5-10 minutes going over that? Is that when things happen, the market moves. And when the market moves, that creates more opportunity for faster growth. So this is like the historical proof of this skill set being recession proof. So that's why, one, you should take it seriously, and two, you should really, take the time to, pay attention to what's going on. You don't have to know every article, because I surely do not, but I have a general consensus and a feel for the foundation of what's going on versus every little minute detail. So that takes care of that. As far as Zeus, we're working on some advancements when it comes to Zeus. One is an advancement to where we can get more charts up at once to kind of free things up processing wise, and then we'll be working on some automated type stuff with the entries, but we're going to take our time on that aspect of things because we want it to be good. But does anybody have any questions on especially if you're brand new, on how Zeus necessarily, I guess like beginners of Zeus or anything like that? The question you have as far as trading it, because we can answer that real quick. Now I'm gonna give it a few also while I look at, because I wanted to do a segment on Bitcoin. So actually, let me leave that back up. See, do we have any questions on that? So no, so we're good there. So it's very ironic. Let me go back to my gold markup. That was it. Dow Jones was. So Dow Jones is imitating a head and shoulders on the 4-hour. At the same time, Bitcoin is demonstrating a head and shoulders on the daily. And this is kind of to debunk the myth that Bitcoin is a stock haven. I know that's a huge myth that people have. Bitcoin is not a stock haven. Bitcoin is a currency haven. So when there's irregularities with currency for different people or different countries, no hint, that's when Bitcoin grows. Because when there's less trust in a currency, fiat currency, then you're going to have more of a interest. And all price means is when price goes up, what's actually going up? The interest in something. So if there's increased interest in engaging with crypto, then that's when price are going to go up. So now with Bitcoin being back at this key level, it played out the head and shoulders. Like I said earlier, head and shoulders do not have to be perfectly square and even. It's just a low, like for a bullish one, a low followed by a lower low, followed by a higher low. So you still have that in play. But now we're back at the neckline. We're literally at the neckline on both Bitcoin and at the same time the Dow Jones. At the same time. So any stock haven beliefs, It's not the case with Bitcoin. Currency haven. But look at this right here. Now that I'll talk about currency haven, let me go to the index here. So let's see, pull this. It's right here. So I want you to, over the next few days, notice how right now there was a low that was made over the last day or so for not the Dow Jones, the dollar index. I don't know why that was taking forever for it to come out. The dollar index. Right now, there's a lot of bullish momentum for Bitcoin. There's also bullish momentum for the dollar index. But you see how they're both at a resistance level. They're both at a resistance level. It's going to be very interesting to see if what's going on causes what's called a price divergence. And a price divergence, you have to go over price divergence I want to go over regular divergence real quick. It's probably easier I'll use it with RSI. That's fine. So let me try to find some divergence just in general to use. I think gold had one recently on the 1 hour. Give me 1 second. So price divergence. There. Here. Here we go. So let me see if I can get rid of this line here so we can see it better. All right. So regular divergence is when you have, a price, you have a lower high and a higher high right here with price. By normal standards, it's supposed to reflect a lower high and a higher high on your, oscillators. But it didn't do that. The lower high on price was actually the higher high on the oscillator. And that usually signals for a shift in momentum. Not necessarily trend, but like a shift in momentum that's about to happen. So that's regular divergence. One price, one oscillator. Second divergence is price divergence. So with price divergence, if I kind of went over that with Dow Jones versus gold. Going back to, where is it? It was CFD gold, but I can do it off of this real quick. Going back to like the coronavirus on gold. So you had, this is coronavirus. Main part was March 2020, right here. Yeah. So gold, it went up during the coronavirus while the Dow Jones went down. So let's say both the Dow Jones and gold were perfectly correlated. So basically when the Dow Jones goes up, gold goes up. If this happened on something that's normally correlated, meaning they're going in the same direction, that would be called price divergence. To where two things that are normally going in the same direction are going in opposite directions, and two things that are normally going in opposite directions are going in the same direction. That's price divergence. So what I would like, as a little bit of a homework assignment just to give you a bigger understanding of things, is to see, because right now, the dollar index and Bitcoin are inverse correlated, meaning dollar index goes up, Bitcoin goes down. Dollar index goes down, Bitcoin goes up. But right now, they're both at a resistance point. Just in general, they're both at a resistance point. Like here. Let's see what happens on the next 2 days. Just from a understanding of the market standpoint. Not necessarily calling like a trade or anything like that. But I think paying attention to this over the next couple days will give you like a lot of insight on trading in general. But pay attention to that. But as far as everything else, so best time frame to take arrows on. Let's see. Best time frame to take arrows on is basically on Forex pairs. I would say it's the 5 and the 15 minute on Forex pairs, including gold. And on indices, the 1 and the 5 minute. Now gold, since Zeus is catered to gold, you can trade gold on just really evenly throughout 1 minute, 5 minute, all the way up to an hour. But I really would say maybe 1 minute to 30 minute, just so you can get better entries. So 1 minute to 30 minute on gold, 5 and 15 on Forex, 1 and 5 on indices. So that's what I would keep in mind there, and I'll probably add it if you don't have access to the Zeus playbook. I'll add it on here as a note as far as best time frames. But if you don't have this, just make sure you just go to bit.ly, .Zeus playbook, bit.ly/Zeus playbook, and you'll get access to this, which will help out a lot. Any other questions? Let's see. Now I'm gonna give it a couple minutes, see if anybody else has questions. If not, that's gonna be it for me. But I'm excited, and tomorrow for people who have at Zeus right now currently, we'll be going over some trading setups. So for here, it's just more so bigger macro economics or macro looks at the markets, some news, and just what's going on with Zeus and what's going on with the major things that we're tracking with Zeus. So let's see here. So if there's not any other questions, thanks to everyone who jumped on. I know that it's going to be a extra really good session tomorrow, because there's a lot of interesting points happening that's going to open up, I would say, tomorrow. Reason being, there's going to be some news that happens tomorrow as well. The unemployment claims for United States, which is a pretty. I don't understand why unemployment claims is actually an orange folder. I believe it should be a red folder. That's a very highly tracked news release by both investors and consumers. But that'll be something to pay attention to. That'll fuel the markets, and also Chairman Powell speaks at the same time. So a lot to digest for tomorrow. Just two events, but two powerful events. So it'll be an interesting day tomorrow when we're on for New York session. But other than that, you guys have a great rest of your day, night, or evening, wherever you are in the world, and we'll see you next time.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.